Creamer Media's Mining Weekly Online is talking to Paul Miller, Head Mining and Metals Investment Banker at Nedbank Capital. Paul, you have just returned from Namibia.
It's really interesting to see how the whole country is pulling in one direction. And it's wonderful to see in Namibia, at the Mining Expo put on by the Chamber of Mines up there, every single mining company and exploration company in Namibia is a member of the Chamber of Mines, and they talk on behalf of the industry with government. It's had a dramatic effect on the Namibian economy, and long may it last.
What sort of rate is the Namibian economy growing at the moment?
I heard talk that it was about 4% that they're expecting Namibia to grow. So as much as they tied very tightly to South Africa, they have been able to grow ahead of ourselves. And it's on the back of very sensible policies around their minerals.
What are these policies that you describe as sensible?
Well, they seem to talk to each other a lot more than we do in South Africa. So there seems to be a lot of interaction between government and the industry. Industry is organized, it speaks with one voice. And importantly, and let's appreciate, they have a modern mining industry without the legacy, almost psychological scars that our mining industry has.
What sort of project activity is on the go in Namibia at the moment?
Well, the most important two projects on the go at the moment are the massive $2 billion Husab uranium mine being built currently, and the Otjikoto gold mine being built by B2 Gold, between $300 and $400 million. These projects are both very close to completion, have had a dramatic effect on the regions they're in Namibia.
Do you think that South Africa could do more there, or are other foreign entities well entrenched already?
Well, of course, the Husab uranium mine is controlled by the Chinese, and it seems pretty clear that they're going to be doing most of their procurement in China in the future as well. So that's an opportunity lost in some respects for the South African mine supply industry, which is a little disappointing.
And what can bankers like yourselves do to involve South Africans on the banking side?
Well, look, we do a lot of work around export credit finance for South African capital goods suppliers into projects on the rest of the continent. That applies equally in Namibia, but it's very important that project developers consider where they're going to procure their capital goods from at the time that they put together their funding plan for their projects. And that way we can demonstrate how South Africa has a really good package around cost-effective capital goods and services combined with export credit finance in South African banks. Notwithstanding the fact that Husab has been financed by the Chinese, the teams on site have been South African, and there's been a very big team here in Johannesburg working on the project. I don't think that'll be the case going forward, but certainly up front it has been. The Otjikoto gold mine was built by the owners team of B2 Gold. Very experienced gold mine developers, have operated in multiple countries around the world. But of course, there the opportunity would all be for subcontractors.
And getting back to South Africa, have we gone ex-growth from a project point of view?
The industry is not going to grow on a net basis, particularly. However, there of course are always projects in the mining industry just to stand still. So we're seeing a lot of replacement capacity coming on board. And of course, De Beers' Venetia project's very significant. Vedanta has announced their JOHANNESBURG and Scorpion zinc project. We anticipate that Phalaborwa Copper is going to have the second lift on their underground block cave operation. So there is a lot happening. In the platinum sector, we've got Royal Bafokeng Stale Drift project, where Sizwe Platinum's busy, Platinum Group Metals is busy. Northern is building their Booysendal project. They've just bought the Everest South assets. So there is activity, much of it replacement capacity, and which you have to have. You have to constantly be reinvesting just to stay standing still.
And how's Nedbank doing in all this?
The economics of many projects have changed. So what was a robust project a few years ago might not be as robust today. So we are seeing fewer projects in the pipeline, perhaps better quality projects in the pipeline. But we're very much open for business. We're very active in South Africa. And we're there to finance the mining industry through the cycle. We don't have a limit. We have the balance sheet, we have the liquidity available. What we need is more projects. We look at the full spectrum, from greenfields project finance for mine development through to regular working capital, transactional banking, the full spectrum, particularly in South Africa. And then on the rest of the continent, we provide project financing and working capital solutions too. The commodity prices and the commodity cycle does not necessarily mean it's poor business for banking. So we find that a lot of our clients are having to draw on some of their lines that which they didn't have to do when commodity prices were higher, to continue to invest in sustaining capital expenditure on their mines. They actually need to access their funding lines when commodity prices are low. And we're there for that. So we're actually seeing quite robust business out of the industry. The industry itself is not growing particularly well. So we need obviously the cycle to change, and that's going to happen later rather than sooner.
But still, you're in a bit of a sweet spot from a banking point of view, in that they have to rely more on their bankers at this point.
Well, they do, but I must say I'd far prefer if the cycle would turn and if we could start seeing net growth in our mining industry. Let's not forget, we have the biggest mining industry in Africa by a long way. We have a very big supplier industry. The procurement that happens in South Africa, it's actually amazing to see what international companies have procurement offices in Johannesburg. We supply a lot of stuff globally. So it's not all doom and gloom, but we do need to get some of the basics right at a political level in South Africa.
That was Creamer Media's Mining Weekly Online, talking to Paul Miller at Nedbank Capital.